Welcome back to our EUR USD Day Trading Challenge. Today, we are testing strategy number 1 during the London trading window, running from 12 a.m. until 7 p.m. London time. The objective is not to predict the market or chase price. Instead, we will mark a reference point, place 2 pending orders, allow the market to choose the direction, and manage every position according to a clearly defined set of rules. Today's session produces 2 profitable trades. The first trade reaches the full 40 pip take profit target, while the second trade adds another 20 pips before the session closes. That gives us a total result of 60 pips profit. Let's take a closer look at exactly how the session developed. Stage 1, preparation and strategy setup. Before the trading window begins, we prepare everything needed to execute the strategy quickly and accurately. To save time, we create 2 order templates in advance. The first template is for a long position. The second template is for a short position. Both templates are initially created with a 40 pip take profit target and a 10 pip stop loss. However, strategy number 1 requires a 20 pip stop loss. So after cloning the orders, we adjust both stop losses from 10 pips to the required 20 pip distance. The final order structure is therefore a pending buy order positioned 10 pips above the reference point, a pending sell order positioned 10 pips below the reference point. Each order has a 20 pip stop loss and a 40 pip take profit target. There is also one very important trade management rule. As soon as one pending order activates, the opposite order must be canceled immediately. We do not want to hold both a long and a short position at the same time. Another essential rule applies once the active trade reaches 20 pips of open profit. At that point, the stop loss must be moved to the entry price, placing the trade at approximately break even. This helps protect the position from turning into a full loss after it has already moved strongly in our favor. The final rule determines when the next setup begins. When a trade closes in profit, we wait 10 minutes before marking a new reference point. When a trade closes in loss, we wait until the next full hour before starting again. With the templates prepared and the strategy rules confirmed, we are ready to begin the session. Stage 2, live trading session. Trade number 1. At exactly 12 a.m. London time, the official trading window opens. We draw a vertical line on the chart to clearly mark the beginning of the session. We then draw a horizontal line at the current market price. This horizontal level becomes our first official reference point. Using the prepared templates, we place 2 pending orders around that level. The buy order is placed 10 pips above the reference point. The sell order is placed 10 pips below the reference point. Both orders now have the correct 20 pip stop loss and 40 pip take profit target. Everything is in position. Now we wait for the market to choose its direction. For several hours, neither side produces a decisive breakout. The market continues moving around the reference area while both pending orders remain ready. Then, at approximately 7 a.m., bullish momentum begins to develop. Price pushes upward and activates the long order. The market has selected the bullish direction. As soon as the long position becomes active, we immediately cancel the pending short order. There is now only one active trade in the market. The long position has a 20 pip stop loss below the entry and a 40 pip take profit target above it. After activation, price continues moving upward. The bullish trend begins developing in our favor, and the trade starts building open profit. 10 pips, 15 pips. Then the position reaches approximately 20 pips of profit. This triggers our break-even rule. The stop loss is moved from its original position to the entry price. The trade is now protected. From this point onward, even if the market reverses sharply, the position should close around break even rather than becoming a full 20 pip loss. The bullish movement continues. By approximately 10 a.m., the trade reaches nearly 30 pips of open profit. The take profit target is now getting closer. However, the market does not continue upward immediately. Momentum begins to weaken, and price starts moving downward. The open profit begins to reduce. This is a critical moment in the session. Many traders would become nervous after watching a position move from nearly 30 pips of profit back toward the entry. Some might close the trade early. Others might interfere with the position because they are afraid of losing the profit they previously saw. But the strategy has already protected the trade at break even. There is no reason to panic. There is no reason to change the target. Our responsibility is to remain disciplined and allow the strategy to work. The downward movement continues, and by approximately 1 p.m., the position has retraced to around 10 pips of open profit. Most of the earlier profit has temporarily disappeared. However, the trade remains active and protected. Then, at approximately 1:30 p.m., everything changes. A sudden and powerful bullish movement enters the market. Price begins rising aggressively. The long position quickly returns to stronger profit. 20 pips, 30 pips, and then the market reaches our full 40 pip take profit target. Trade number 1 is complete. The position closes with 40 pips profit. After reaching our target, the market continues rising and eventually moves close to 80 pips above the original reference point. However, our strategy was designed to capture 40 pips. We followed the plan, secured the target, and avoided becoming greedy after the trade had already delivered the expected result. This is an excellent example of why discipline matters more than trying to capture every possible movement in the market. The first trade is now closed. Result plus 40 pips. Trade number 2, because trade number 1 ended in profit, strategy number 1 requires us to wait 10 minutes before creating the next setup. After the 10-minute waiting period, we mark a new reference point using the current market price. Once again, we place 2 pending orders around that level. The buy order is positioned 10 pips above the new reference point. The sell order is positioned 10 pips below it. Both orders have the same risk management structure: a 20 pip stop loss, a 40 pip take profit target. And the stop loss will be moved to break even if the active trade reaches 20 pips of profit. At approximately 2 p.m., the market begins moving downward. Price reaches the sell entry level and activates the short order. The pending long order is immediately canceled. Trade number 2 is now active. This time, the market has selected the bearish direction. After activating the short position, price continues moving lower. The bearish trend begins working in our favor, and the trade gradually builds open profit. Unlike the first trade, this position does not reach the full 40 pip take profit target before the trading window ends. However, it remains profitable as the session moves toward the official closing time. We continue following the plan without interfering unnecessarily. The strategy states that trading must stop at 7 p.m. London time. Therefore, when the clock reaches 7 p.m., the session officially ends. The short position is closed with approximately 20 pips profit. Trade number 2 is complete. Result plus 20 pips. Stage 3. Final result and euro calculation. Now let's calculate the complete result from today's EUR USD trading session. Trade number 1 produced 40 pips profit. Trade number 2 produced 20 pips profit. That gives us 40 pips plus 20 pips equals 60 pips total profit. The opening account balance was €1,069. The table shows a position size factor of 3.2, with 20 pips producing a profit of €64. That means the calculation being used is 1 pip equals €3.20. Using that same value for both trades, trade number 1 produced 40 pips multiplied by 3.28 equals €128 profit. The balance after trade number 1 becomes €1,069 plus €128 equals €1,197. Trade number 2 produced 20 pips multiplied by €3.20 equals €64 profit. The final account balance becomes 1,197 plus €64 equals 1,261. The account began the session with 1,069. The total daily profit was €192. The final balance was 1,261 euros. That represents an increase of approximately 17.96% for the session, based on the position value calculation provided in the trading table. Closing commentary. What a strong session for EUR USD. Strategy number 1. 2 trades were activated. 2 trades finished in profit. The first position demonstrated the importance of patience. It reached almost 30 pips of profit, retraced back toward 10 pips, and then exploded upward to hit the full 40 pip target. Because the stop loss had already been moved to break even, the trade remained protected during the retracement. The second position demonstrated the importance of respecting the trading window. The bearish trade remained